What is up everybody, Gifford here and welcome to another video. Now today I'm going to be talking about MPW stock and is it a buy now. So just a quick agenda on this, we're going to go over the stock chart, then we're going to have a look at the DCF model of what people think MPW is worth. Then we're going to head over and look at the Q4 2024 earnings report because that's pretty important about understanding the company. Then at the end of the video we're going to have a look at the trades that I do because I generate $50 a week from MPW and I've been an investor for MPW in the last 2 years. Then we're going to ask the question if I'm buying more shares. So having a look at the MPW stock price in the last month, we can see here that it's up 25%, which is pretty good. And if we change that now to the 6-month chart, we can see it's just been kind of hovering below the $3, around about $4 to about $6.50. And the 1 year chart shows that it is actually up 44%, so that's pretty good, and it did get as low as about $3.50 at some stages along here. However, when we click over to the 5 year chart, we can see that MPW has gone down by 73.85%, and this is why I thought that there was an opportunity here to buy. And my cost average, if you've been a viewer of mine, is that I actually started buying around the $13.50 mark, and you can see it's just actually keeps falling since I've been buying then. So because the share price was falling in MPW, that was one of the things why I wanted to invest in them, because I saw an opportunity where the stock price was getting lower and lower every week. And when I looked into them, I thought, well, this might be a recovery play. I think they could be going up. But however, I was a little bit wrong after finding out some things after some earnings call. But anyway, let's carry on because we'll talk more about that later in the video. So we're over here at Alpha Spread, and this is just a nice free website that tells you kind of the DCF model. It's just an evaluation model where they take into account all its financials and then give you some sort of number, a share price number, and what they think it is according to the fundamentals. So we can see that MPW has actually got a good value on it, which is $15.60. So they reckon it's undervalued currently by 61% if you compare that to the current market price of $6.02. So it's just not me thinking it's undervalued according to the metrics and the DCF model of this website here, which it has a lot of other stocks in here as well. And just understand, if you want to know how they get these values, you can always log into the site and click over here. But this is just someone else's opinion of what their stock is, and what actually happens to the stock is a completely different story. But I thought that, yeah, they were undervalued and that the market was punishing these people for some reason, and that's why I decided to get into them about 2 years ago. So just before we get into the actual earnings report, you can just see the summary here of where they actually were up on revenue. So you can see that they were 264% up on revenue because they were actually sort of positive. The net income was also above even though it was negative, and the diluted EPS was up even though it is negative, and the net profit margin stayed down, as you can see there. But in general it was positive because everyone expected them to make a further loss, but this revenue number came out as a bit of a surprise. And having a look at the previous earnings calls, you can see that they've just had some bad times where they've missed pretty much all of them because of what's happened to them. So just very quickly, MPW Trust is a self-advised real estate investment trust formed in 2003 to acquire and develop net leased hospital facilities. So we can see there at the bottom that they own 396 properties, 53 operators, and then one of the metrics that they calculate is how many beds they have, because obviously per bed they charge a certain amount of money for that. So that's $39,000. They're across 31 US states and also 9 other countries, so pretty diversified, and they've got a lot of good coverage. So this is why I thought they were kind of, everyone needs hospitals, people are going to be paying money to get into them. Healthcare is expensive, so there must be some money in this for the shareholder. So as a new investor into REITs, one of the things I found out is that the metrics that they do have is called FFO, so funds from operations. So we can see here this says that the amounts are in thousands, therefore this is what, 663 million negative because of the brackets. And then they got a bit better, less losses, it's $412 million. Again, their EPS was negative 1.11, and then it's a little bit lower at 0.69, but those brackets also mean it is negative. So while it's a little bit better, it's still not good of what's happening to this company. And one of the things about REITs is that it's all about the debt and how they recycle that and what the percentages are, because in real estate you do borrow money. You don't actually have the money up front, because it is really expensive to buy property. So what you have to do is you have to sort of recycle the debt, or whatever the name they have it, and then you've got to fix it. And just like if you were to have a mortgage, a personal mortgage, it's the same way, but this is the commercial side of it. See, the other things that at the beginning I did like looking into REITs, but eventually these kind of numbers and the debt summary and how it all works didn't really interest me that much. So it did put me off in the end is investing, because it's not like sort of investing in one of my new stocks, Celsius. I like learning about the industry, bits and pieces of it, the growth, and this kind of stuff here is not really what I want to be learning and looking up. Again, with REITs, this is just them showing you how they're using that debt, what percentages is, when they're going to be paying it, and where it's all coming from, because this is very important into how it works with the running of the company, and also how it's how you can generate that funds from operations and increase that number. So this number here will look familiar because that was in the summary, but basically if we compare the two numbers that they have for the revenue, the total revenues there, which in December 31st 2023 they were negative 122 million, but here now a year later you see they surprised with $231 million. So that's why there has been a pop in the share price and why it has increased a little bit, because people think, hey, this company now is doing a lot better and the revenues have started to come back. Maybe this company is on the up, where they're starting to generate revenue and maybe positive earnings again. But we can see here that it was shown before that the EPS is actually negative, so they are still making negative earnings. And one of the biggest things that I started not liking about this company is they did have to cut their dividend. So their dividend used to be 0.15 cents. However, to make sure they got enough cash reserves, they had to sort of lower their dividend to make sure that more money is kept into the business, because they are finding it hard right now. So that brings us to the current dividend, where if you own one share, you will only get 8 cents from that. So here is a number that shows that the company has been selling some of their assets, because they do need to pay some of that back, because their revenue and their earnings have not been there. So we can see 2023 they had 18 billion, but now after doing some sales, that's down to $14 billion. So there is more slides to that, but I just wanted to show you the most important ones and the ones that I was interested in, showing the numbers of how the company is doing. So the next part I want to talk about is the trades that I've been doing, and here I am completely selling out of all my shares. However, I do own 6 calls in them, which I can show you that in the next page, but 6 calls means that I get to control 600 shares and they expire in June 2026. So you can probably tell that I am not bullish in the company anymore, and I don't actually want to own any more shares. And I did invest in these just to do options in them, so do the wheel strategy, sort of sell puts and then sell covered calls in them, and then if they get assigned, sell puts again to generate that, and also collect some dividends. However, the dividend has now been slashed and the company still continues after so many months to not improve, and I don't want to be an investor anymore by holding shares. So here's just an example on the Excel sheet of where I have been doing covered calls on the position, and that I was making $50 a week income from this, but yeah, so we can see that the dividend has been slashed, and then I have been slowly just trying to get out of my positions in this company. So will I be buying any more MPW stock? Obviously it is a no. So long term I hold the $5 calls, and we can see that this is my account here, and where's the $5 calls? So here's the $5 calls here. So if we get to January 2026, that's January 16 there, and the share price is above $5, I then earn money from this here. Obviously if the share price is below that $5 mark, I will not earn any money at all. And so as you can see here, I own 100 shares of MPW. However, because I am getting rid of those, what I decided to do was a call option, which means I am actually going to be selling those shares. The only way I'd have to keep them is that in a month's time, the MPW stock price would have to drop below $4, but I don't see that happening. The company is actually doing pretty well now, but that's the other thing. I don't really understand why they're doing well. The results are still terrible, but the stock price has gotten up a little bit. And therefore, yeah, I'm just not interested in owning this company anymore, because I can't actually understand it that great and how the share price is moving with the company value. So obviously I've stopped wheeling this company now for options, because I don't have any put options here as well, and I'm just basically taking my money out of them while holding the upside for one more year in case they double in share price. Well, I'm going to make a decent amount of money there if that seems to happen. So why not go all in? Well, there's no growth anymore. The company is struggling, and that's because after the losses of revenue from their non-paying tenants. So they still have to work through that. That's going to take a number of months, or probably out to a year. And that is why I'm essentially out, because I had an idea, I had a plan of what I thought their recovery would be like, and that hasn't quite worked out this time around. I've got it wrong, and luckily I've managed to recover the money I've lost in them through my other stocks, namely Celsius stock, so I'm pretty happy with that. So I don't want to make this a long video, but my summary is that I no longer want to hold MPW shares for the long term. I do have some call options, but after 2026 of January, I will not be an owner of these anymore. So I initially bought for the dividends and wheeling the stock. However, as it's had some hardship, and also there might be a chance that they're going to go negative 50% again on the dividends, so that's going to get cut again, reinforcing the fact that I don't want to be an investor in this company. So being in my Interactive Brokers account, I have bought some options in there to capture the upside, so that's a good thing, even though I'm not buying shares. And if you've watched my recent videos, you'll see that I'm actually using the MPW money into more bullish stocks that I feel, which is Celsius and also Nvidia. And the big thing here for me is that moving on from MPW stock, instead of collecting $50 New Zealand every week, I've now moved my target to $150 a week using Celsius and Nvidia plays. Anyways, if you've got any questions on that, feel free to ask me. Not all my stocks are winners. I understand that. I'm not a genius or anything like that. And I understand when to quit when I don't understand the stock anymore. In this case, I've got it wrong too many times and I want to move on. Feel free to use any of my referral codes if you're from New Zealand and you want to start investing. If you want to hear from me every other day, feel free to go over to Instagram. I post on my stories there about what I'm doing in the portfolio and stock market news every other day. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Hit like and subscribe to help me out, and if you want to watch this end video here, it's all about my Nvidia options gambling. Thank you for watching, and I will see you in the next video. Goodbye.